Welcome to TalkTickers, your deep dive into earnings calls. Our job. Cut through the jargon, pull out the key insights, and get you up to speed fast.
Yep, we digest the details so you get what really matters from these calls.
And today, we're unpacking the latest results from a major player right at the heart of this whole AI explosion. We've got the Q1 numbers, the strategy talk. Let's get into it.
Okay, so first quarter fiscal 26, headline number, $44 billion in total revenue.
Wow. Okay, and that's up, what, 69% year over year?
That's right, 69%. And they made a point of saying this beat their own forecasts, even though they called the environment challenging.
Always good to beat expectations, challenging or not. So where's that growth really coming from?
It's overwhelmingly the data center business. That segment pulled in $39 billion.
$39 billion, just data center.
Yep, and that's a 73% jump compared to last year. Huge numbers.
73%. So what's lighting the fire under data center? What are the big drivers there?
Well, they highlighted two main things. First, a really strong shift in workloads towards inference. So not just training AI, but actually using it.
Running the models, getting answers, doing tasks. Makes sense.
Exactly. And second, massive AI factory buildouts happening globally. They stressed that the customer commitments for these things are solid.
AI factories. You hear that phrase and you just picture scale, don't you? And the tech powering these factories right now, it's all about Blackwell, isn't it?
Absolutely. They said the Blackwell ramp is the fastest they've ever had. Fastest in company history.
And you see that in the numbers.
Definitely. Blackwell apparently made up nearly 70% of their data center compute revenue just in Q1. They basically said the transition from Hopper, the previous generation, is pretty much done.
Okay, so Blackwell's the star. They talked specifics about the architecture, right? GB200 NVL.
Yeah, they did. And the key thing isn't just it's faster. It's a fundamental architectural change, really built for data center scale. The big goal, lowest possible cost for each inference token.
Getting that cost per calculation down?
Precisely. And it seems to be working. They mentioned better manufacturing yields, which is impressive for something this complex, and actual rack shipments. Like entire pre-built systems are ramping up strongly to customers.
And these GB200 NVL racks, they're out there now.
Generally available, yeah.
Yeah.
For model builders, big companies, even these sovereign AI projects we're hearing about.
The scale examples were wild. Did they really say hyperscalers are taking nearly 1,000 NVL-72 racks a week?
On average, yeah. 1,000 racks a week. That works out to, what, 72,000 Blackwell GPUs every week.
It's hard to wrap your head around. And they expect that rate to go up this quarter.
That's what they said. They used Microsoft as an example, already got tens of thousands of Blackwell GPUs, planning to ramp up to hundreds of thousands of GB200s.
Wow. And OpenAI was mentioned as a key customer there too, right?
Yep, using that Microsoft capacity.
But they're already talking next gen. Blackwell is just hitting its stride.
That's the cadence these days. Blackwell Ultra, or GB300. They started sampling that this month with the big cloud providers. Production shipments. Yeah. Expected later this quarter.
Okay, so what's the deal with GB300? Is it a whole new platform again?
Interestingly, no. They described it mostly as a drop-in replacement. Same basic architecture, same physical size, same power needs as the GB200.
Ah, so that makes it easier for customers to upgrade and probably helps keep those manufacturing yields high.
That seems to be the idea. But drop-in doesn't mean same performance. The B300 GPUs, they pack 50% more HBM, that high bandwidth memory.
Okay.
And that translates to another 50% jump in dense FP4 inference compute performance compared to the B200. So significant uplift.
Gotcha. So faster, but fits in the same slot. This really highlights their annual product cycle, doesn't it?
It does. They laid out a roadmap going all the way through 2028. They emphasized how that aligns with their customers' own multi-year plans for building out this massive AI infrastructure.
Okay, silicon. Buildouts. Let's circle back to inference. You said that was a key driver. They called it a sharp jump, a step function surge. Why now? Why the sudden explosion?
It's tied to what they called reasoning AI. Think about the difference between asking an AI for a fact versus asking it to, say, plan a trip or debug code.
Right, much more complex.
Exactly. These reasoning models, they need hundreds, maybe thousands of times more compute tokens for each task.
Yeah.
They're essentially doing a lot more internal thinking, breaking down the problem, planning steps, using tools before giving you an answer.
So way more processing under the hood for each interaction.
Yep, that Microsoft example again. Over 100 trillion tokens processed in Q1.
Trillion.
A 5-fold increase year over year. That just shows the sheer demand for these more capable AI AI services.
And the tech is evolving to handle this.
It is. They talked up NVIDIA Dynamo on the Blackwell NVL-72 systems, claiming it boosts inference throughput by 30x for these new reasoning models.
30 times.
That's the claim. They gave examples like Perplexity and Capital One using it to cut chatbot latency by 5x, making those complex interactions much faster.
They also mentioned ML-perf results, right? The benchmarking competition.
Yeah, their submission using the GB200 NVL-72 showed up to 30x higher throughput compared to an older H200 submission on a specific benchmark, Llama 3.1, that comes from both faster GPUs and connecting more of them together efficiently with NVLink.
And it's not just the hardware doing the heavy lifting, software matters too.
Hugely. They really stress this. Software updates alone have apparently boosted Blackwell's performance by 1.5x in just the last month.
Wow.
And they expect that to continue, just like they saw with Hopper. Hopper's inference performance apparently increased 4x over 2 years, mostly through software improvements on their programmable architecture.
That continuous improvement is key. Now, you mentioned NVLink for connecting GPUs. As these AI factories get bigger, networking must be critical.
Absolutely essential. And their networking business reflected that. It grew 64% sequentially in Q1, hitting $5 billion.
$5 billion just for the networking components.
Yeah, because customers need super efficient ways to link potentially thousands or even millions of GPUs together for these massive AI jobs. They talked about scale up connecting chips within a system, and scale out connecting systems across the data center.
Okay, scale up first. That's where NVLink comes in.
Right. They called it the world's fastest switch for scale up. 5th generation now offers 14 times the bandwidth of standard PCIe Gen 5.
14 times.
And a single NVLink 72 rack can handle 130 terabytes per second of bandwidth. It's become a significant business. They shipped over $1 billion worth just in Q1. A new growth area for them.
And NVLink Fusion, what was that about?
That's interesting. It lets partners, hyperscalers, chip designers like MediaTek, Marvell, Qualcomm build their own custom chips, like unique processors or accelerators that plug directly into the NVIDIA platform using NVLink.
So it pulls more partners tightly into their ecosystem.
Exactly. Then for scale out, connecting all those racks together, their Ethernet solutions are key, especially Spectrum X.
Right, that name came up. How's that doing?
Strong growth, both sequentially and year on year. It's now on an annualized revenue run rate of over $8 billion. $8
billion annualized just for Spectrum X.
Yep. They're seeing broad adoption. Mentioned adding Google Cloud and Meta just this quarter.
Why is Spectrum X so important for these AI clusters?
It tackles network bottlenecks. In huge AI clusters, without specialized networking, utilization can drop as low as 50% because the network just can't keep up.
Half the expensive GPUs are just sitting idle.
Pretty much. Spectrum X adds things like low latency, congestion control, think smart traffic management, and adaptive routing to find the best data paths. This apparently boosts cluster utilization up to 85–90%. It's about bringing that supercomputing efficiency to the Ethernet world.
And they're looking ahead in networking too. Silicon photonics.
Yeah, new Spectrum X and Quantum X switches using silicon photonics and co-packaged optics. Fancy terms, but the point is enabling AI factories to scale to millions of GPUs. They're talking 3.5x better power efficiency, 10x better network resilience, and faster deployment times for customers.
And Bluefield, what role does that play?
Bluefield is their control plane. Think of it as the management layer. It handles storage, security, and importantly, isolating different customers' workloads in shared multi-tenant clusters, all while trying to maintain that high performance.
Okay, stepping back from the tech stack itself, the calls seem to paint a picture of AI expanding rapidly into new areas, creating totally new growth vectors.
Definitely. They talked about the pace of AI factory deployments just accelerating. Nearly 100 NVIDIA-powered AI factories are apparently in flight this quarter.
In flight, meaning being built or deployed right now.
Seems so. That's double the number from last year. And the average size, the number of GPUs per factory, is also doubling. These are popping up across all sorts of industries and countries.
And one huge theme was sovereign AI.
Yeah, this felt like a really big point for them. The idea is that nations themselves now see AI infrastructure as critical, like roads or power grids. It's foundational for the next industrial revolution.
So countries are building their own national AI platforms.
That's the picture. They see it as a major new growth engine, separate from the usual cloud or enterprise markets. They mention specific examples, big sovereign cloud projects in Saudi Arabia, the UAE, Taiwan's first AI factory.
And they listed a bunch of other countries, too.
Sweden, Japan, Korea, India, Canada, France, the UK, Germany, Italy, Spain. The list went on. They even talked about seeing future projects needing tens of gigawatts of power for AI infrastructure.
Tens of gigawatts. That's power plant scale.
It's enormous scale. Then moving beyond nations, they talked about enterprise AI being poised for takeoff.
The idea of AI agents becoming a sort of digital workforce.
Right, transforming how companies operate.
Yeah.
But for enterprises to really adopt this, the AI often needs to run inside their own data centers on-premise for data security and control.
So they need products specifically for that.
Exactly. They announced things like the RTX Pro Enterprise Server and new DGX systems Spark and Station designed for on-prem developers. DGX Station with the new GB200 could hit 20 petaflops. They stressed they're partnering with basically every major IT provider to push this enterprise adoption.
Another area was industrial AI and robotics.
Yeah, connecting AI to the physical world. New factories being built are prime ground for this. Their vision is basically every physical factory will have a digital AI factory twin or counterpart.
Using tools like Omniverse, their simulation platform.
Right. They're seeing traction there, integrating with big software platforms like Databricks and SAP, using it for things like managing fleets of robots. They gave some specific customer wins, too.
Like TSMC designing factories faster.
Yeah, TSMC's saving months on fab design.
Yeah.
Foxconn speeding up thermal simulations 150 times. Pegatron cutting assembly line defects by 67%. Real-world impact.
Automotive came up, too.
Yeah.
Strong growth there.
Up 72% year-on-year. Driven by self-driving features rolling out and just strong demand for new energy vehicles generally. Mentioned partnerships with GM and Mercedes vans hitting the road soon with their tech.
And robotics itself, almost as a separate category.
It felt like it. They painted a picture of the era of robotics being here now. Billions of robots, hundreds of millions of autonomous cars, hundreds of thousands of robotic factories and warehouses.
It's a big vision.
Huge. And they're building tools for it. They introduced Isaac Groot, called it the world's first open foundation model, specifically for humanoid robots.
A foundation model for humanoids. Okay.
Yeah, and other open models like Cosmo World for generating synthetic data, simulating environments. Companies like Figure AI, Boston Dynamics, even GE Healthcare for medical simulations are apparently using these new Isaac tools.
All right, so that's the overwhelmingly positive growth story, the expanding frontier. But they also had to address a major challenge, right? The China situation.
Yeah, they tackled it head on. Specifically, the impact of new U.S. export controls that hit on April 9th, particularly affecting their H20 chip, which was designed for the China market.
And the key was no grace period on those new rules.
Right, immediate impact. So in Q1, they booked $4.6 billion in H20 revenue before that April 9th cutoff.
But then the rules changed.
And they couldn't ship another $2.5 billion worth of H20 that was already ordered for Q1. This forced them to take a massive $4.5 billion charge, basically writing down inventory and purchase commitments they could no longer fulfill.
$4.5 billion charge. Ouch. Though they did say it was less than they initially feared because they could reuse some materials.
Correct. Still a huge number.
Yeah.
And looking forward, the impact continues. China's share of their data center revenue was already down sequentially in Q1 because of this.
And for Q2?
They expect a meaningful decrease in China data center revenue. The Q2 forecast specifically includes losing about $8 billion in expected H20 revenue for the quarter.
$8 billion wiped off the Q2 outlook just from that one product line in China.
It's substantial. And they didn't just state the numbers. They offered a pretty strong strategic perspective on it during the call.
What was their take?
Their view is that the China AI accelerator market, which they estimate at $50 billion, is now effectively closed off to U.S. companies. They see this obviously hurting them, but also, in their opinion, benefiting foreign competitors.
And it killed the Hopper business there, too.
They said the H20 ban basically ended their Hopper data center business in China because they can't tweak Hopper any further to meet the new rules. Hence the multi-billion-dollar write-off on inventory they can't sell or use elsewhere. They're exploring other limited ways to compete, but Hopper in China is done.
What was their broader strategic argument about this policy?
Their perspective was, look, China's AI development isn't going to stop. It'll move forward with or without U.S. chips. The real question, they argued, is whose platform that development runs on American platforms or rivals.
Their point being that restricting U.S. tech might just push China towards alternatives?
Yeah, and they argued that trying to shield Chinese chip makers actually makes them stronger in the long run and weakens the U.S. position. They felt export controls have, maybe unintentionally, spurred China's own innovation.
They linked it to the idea of the AI stack.
Exactly. They said the AI race is fundamentally about which stack, the whole ecosystem of hardware and software, wins globally. They challenged the policy assumption that China couldn't make advanced AI chips, calling that view always questionable and now clearly wrong, given China's manufacturing progress.
So the conclusion being
that the platform that wins over AI developers worldwide, including in China, ultimately wins the AI race. Therefore, they believe U.S. policy should focus on strengthening U.S. platforms and attracting global talent to them, not inadvertently driving developers to competing ecosystems.
it's a strong viewpoint. They also brought up open source models coming out of China.
They did. Mention models like DeepSeek and Qwen, calling them some of the best open source models out there, gaining traction globally. DeepSeek R1, specifically, bringing reasoning capabilities to open source.
How did that connect to their strategy?
It reinforced their point about platforms. They argued that America wins when powerful open source models, wherever they originate, run best on American infrastructure. So U.S. platforms need to be the best place for open source AI globally, fostering that collaboration.
Okay, so a major headwind addressed very directly. But then they shifted gears completely, talking about building manufacturing in the U.S.
Yeah, a big push for onshore manufacturing. They framed it as part of reshoring advanced tech, creating jobs, boosting national security, and noting these future factories will be heavily automated, robotic.
They gave concrete examples.
Oh yeah, TSMC building 6 fabs and 2 advanced packaging plants just for them in Arizona. Volume production expected by year-end. Other suppliers like Spill and Amcor also building packaging and testing facilities in Arizona.
And supercomputer assembly, too.
Foxconn building a 1 million square foot factory in Houston specifically to build their AI supercomputers. Wistron doing something similar in Fort Worth, Texas.
And they're backing this with purchase commitments.
Substantial long-term commitments, they said, calling it a deep investment in America's AI manufacturing future.
What's the goal timeline for this U.S.-built pipeline?
Ambitious. Chip to fully assembled supercomputer built in America within a year. They acknowledge how incredibly complex it is, mentioning each GB200 NVL-72 rack has 1.2 million parts and weighs almost 2 tons, but praised their partners.
Okay, let's quickly run through the rest of the financials and the Q2 outlook. Gross margins.
Q1 GAAP was 60.5%, non-GAAP 61%. But that includes the big H20 charge.
Right, excluding the charge.
Non-GAAP margin would have been 71.3%, a bit better than they'd guided for. Operating expenses were up, mainly due to hiring, compensation, and investing in more infrastructure and AI solutions. They plan to keep investing throughout the year.
Shareholder returns.
Record $14.3 billion returned in Q1 via buybacks and dividends. They flagged that as a key part of their capital strategy.
And the Q2 outlook. Top line.
Guiding for $45 billion, plus or minus 2%. They expect modest growth across all platforms sequentially.
But that includes the China hit, right?
Yes, explicitly. They said continued Blackwell ramp is expected to be partly offset by the decline in China revenue, specifically calling out that loss of roughly $8 billion in H20 revenue baked into the Q2 forecast.
Q2 gross margin guidance.
GAAP 71.8%, non-GAAP 72%, plus or minus 0.5%. They expect better Blackwell profitability to nudge margins up slightly, and they're still aiming for mid-70s margins later this year.
OpEx outlook.
Q2 expected around $5.7 billion GAAP, $4 billion non-GAAP, still forecasting full-year operating expense growth in the mid-30% range for fiscal 26.
Okay, let's try to synthesize all this. It's a lot. You've got this core data center engine just firing on all cylinders with Blackwell, massive new demand drivers like inference and agentic AI, networking booming alongside it, and then all these potentially enormous new growth areas popping up: sovereign, enterprise, industrial, robotics.
It's a picture of incredible momentum in many areas, but then simultaneously, you have this major China headwind, a significant financial hit acknowledged, a $50 billion market effectively closed off, and this whole strategic debate about platform competition and export controls.
So for you, the listener, trying to make sense of this, it's interesting to juxtapose those two things they laid out. On one side, this estimated $50 billion China TAM that's now largely gone, resulting in that specific $8 billion Q2 revenue impact from H20.
But then, weigh that against the other things discussed. The scale of sovereign AI nations investing gigawatts, the potential transformation of the $500 billion enterprise IT market, the sheer vision for robotics, Billions of robots, hundreds of thousands of automated factories.
Which leads us to our This Is Not Financial Advice segment. Here's a thought, purely based on the narrative presented in the call. Could the intense focus on that $8 billion quarterly China revenue loss be overshadowing the potential scale and velocity of these new, diverse global growth vectors?
I mean, it's definitely something to ponder. The implication could be that while the China loss is real and immediate, the combination of sovereign AI, enterprise AI moving on-prem, industrial AI, and robotics might collectively unlock a much, much larger addressable market.
Yeah.
Potentially faster than people realize.
So the outrageous but plausible idea, again, not financial advice, what if the smart money isn't just calculating the China deduction, but trying to price in the exponential potential of everything else they talked about? Could the strategic challenge in China actually accelerate the pivot and ramp up into these other massive global opportunities even faster?
It's a provocative way to frame it, based purely on the breadth of opportunities they laid out versus the specific headwind. Something to think about for sure.
Absolutely. This deep dive really covered a huge amount of ground, didn't it? From silicon details and network switches to global nation-state investments and the future of factories and robots.
It underscores that phrase, the age of AI is here. It's clearly not just about fancier chatbots anymore. It's reshaping fundamental infrastructure, manufacturing, work itself. It demands totally new ways of computing at scales we've never seen before.
And based on the sheer scale of investment and the pace of innovation discussed in this call, it really does feel like we're just scratching the surface.
It certainly seems that way. A lot more to come.
Well, thank you for joining us on TalkTickers for this deep dive. We hope breaking down the call like this gives you a clearer picture of the moving parts and the bigger trends.
Keep digging into this space. It's constantly evolving, and understanding these shifts is going to be crucial.